Hi there. Welcome to Traders Talk. This is Tuesday again, and we once meet again on today's Traders Talk. And this is Meng Hon, and I am your host and your only and sole host for Traders Talk. Okay, great. Great to see so many of you guys today. And of course, we have again many things to talk. We will start with the market, what happened to the market, and then I will give some insights about trading and investing as usual. And of course, this would be a very good session, especially if you are someone new. If you are someone new, or even if you are someone who is actually seasoned in the market, because of course, we know that during the current time, a lot of people are actually feeling the pain. And of course, I would actually want to give some perspective about this stock market trading and also investing. Yeah, and yeah, great. Okay, I have some friends here. I see online. Okay, great. So good. Okay, so today we are actually going to cover firstly, of course, the market. What actually happened in the market in the last week. If you can actually hear me, let me just check the thing. If you can hear me, just give me a thumbs up so that I know you can hear me. Okay, I think that is okay. All right, good. So the market, okay, actually the market to me is actually not too bad. And I will actually explain why. Yeah, and let me enlarge this thing here. Okay, all right. Okay, is it good? Is it good? No. Let me see. Something wrong here. Okay. Okay, let's see. Remove this. I add this to screen. Okay. Yep, I think got the wrong screen. Wait. What's wrong with the screen? Okay, I think it's okay. Okay, actually, the S&P yesterday, of course, it was actually down, and of course, in fact, when we actually started the market, right? When we actually started the market, it actually went up about 30 points, if not mistaken. It actually went up by 30 points, and of course, that is the time. The I saw that it went up 30 points, and then I think about 12 plus or 12 plus. I think I went. It was actually coming down again, and then I went to sleep. Yeah, but of course, the sentiment for the market is still not too great. There have been, of course, more and more. I won't say more and more bad news. Of course, the earlier issues with Russia and Ukraine is still continuing for the second week right now. And besides that, there are more so-called bad news coming also alongside Ukraine thing. This is actually more political, I would say, and these things also move into move overboard to the China, geographical China, yeah. And of course, the Ukraine Russia tension has actually caused some kind of rumble between US and also China, because of course China tried to actually stay neutral within all this turmoil, right? They actually tried to stay neutral, but of course there are also news that Russia has actually asked China to actually help it with supply arms and all these kind of things. Yeah, because all the other NATO countries like UK, US, and all, right, are actually are actually giving some form of military aid to Ukraine. As a result, the Russian army actually also suffered quite damaging results in the invasion. Yeah, so that has actually started, and of course, whether it's related or not related, then what happened was last Friday, I think like it was last Friday, then the US SEC also came out again with a list of 5 companies that may face delisting. Those are actually China companies, China ADR companies listed in the US. Yeah, that means they are China listed companies which actually list their ADRs, American Depositories receipts in the US. And of course, they wanted them to actually comply with certain auditing rules that the auditors need to be also audited. Yeah, and of course, this is not something new. It actually came out already 2 years ago. 2 years ago, and of course, this now it actually came out again, and of course with all this kind of news coming in, the sell off in the Chinese stocks also went deeper. Yeah, so these are actually some things which transpired last week. And S&P yesterday actually closed down by 31 points. It was up 30 over points here in the earlier part of the session, and then later on they had a sell off and close 30 points down. So intraday volatility again is actually about 60, close to about 60 points up and down, yeah, between the highs and the lows. Yeah, okay. So of course, as I said earlier, uh, if you are actually trading, of course, all these intraday trading, although it takes a bit more time, yeah, that would actually be some great opportunities for you to actually trade intraday, yeah, because most of the movements nowadays, right? Movements nowadays are actually quite high intraday movements. Yeah, quite high intraday movements. So this is S&P, and of course, if you look at the moving averages, right? It has actually crossed over to this is actually the 20 moving average crossing the 50, and then of course the 50 has actually crossed the 100, and this is actually 150. And only I think I think it's only yesterday itself, the third level, which is the 200 moving average, is already crossed from the 50. Of course, all these are actually indicators of um, also bearish indicators, short midterm bearish indicators, and of course S&P might continue to actually go down further, yeah, based on all these indicators. But we would not know, and of course this is actually one level which we actually wanted to see if it breached, and of course yesterday itself it dipped to this earlier low level of 4157, and subsequent it has actually bounced back up and closed above. Yeah, so this is one level which we actually need to see, and it is actually closing. I would say it is not too difficult for it to breach this level. Any kind of a small little bad news would actually push it below 4157. Then of course the next level for us to actually see is actually the 4100 level, to see actually it breaches. Of course, if it breaches, then you will actually see lower lows coming through, which is also indicator of a continued downtrend for the S&P. Yeah, so this is actually the S&P overall market. But why I say it is actually not too bad, right? Why I say it's actually not too bad. Let me put it bigger. Okay, why I say it's actually not too bad. Why is the screen not too big? Okay, why I say it's actually not too bad is because if you look at the S&P sector, the heat map, right? Okay, if you look at the 1 day performance, right? Of course, this was actually yesterday's performance. You can actually see that it is actually different, slightly different from last week. Okay, what we saw last week was all the sectors are actually red. This is S&P, right? Let me just get it right. Okay, So this is actually S&P, right? Yeah, compared to last week, right? When we had the show, right? If not mistaken, everything was actually red. All the sectors was red except for energy. Except for energy, this is the only sector which was actually green. Yeah, and of course, yesterday itself, you if you look at the market, right? The energy sector has actually sold off. Yeah, because oil has actually reached 120 earlier the week, right? And of course, subsequent, I think yesterday over the weekend itself, price has already came down to more reasonable level. So of course, because of that, the oil and energy sector had of course sold off. And if you look at other sectors, right, the particular sector which we also spoke about last week was financial. And of course, because of the rate hike, which is expected to come this week, right? If not mistaken, this week itself, the firm hike, right? The financial sector was actually green since mid of last week. Yeah, mid of last week. I think on Wednesday itself, the financial sector had actually bounced off from its low, and of course, during last week's show, we spoke about during last week's show we actually spoke about what is that we actually spoke about visa, right? We actually spoke about visa. Yeah, remember we actually spoke about visa, where I mentioned that it's actually uh, a good opportunity if you're actually looking to invest. This is actually the second time round where we we are actually able to put in an opportunity, right? Yeah, we did actually mention that there was actually uh, an opportunity here where it actually bound goes back to the earlier support levels. Yeah, but of course, then subsequent to that, Visa has actually bounced up quite healthy. And of course, yesterday itself, if not mistaken, it went up all the way plus $7 over. But because the market has actually turned the other way, midpoint, then of course it actually lost some of its momentum, upwards momentum. Yeah, but of course it is always a possibility that it can continue to come down. But of course, the indicators for this sector, especially on the financial side, is actually quite okay now. Even the ETF for financials, right? XLF, right? ETF XLF had also similar move since last week. Yeah, since similar move last week to actually push higher. Yeah. Again, as I said many times around, the how to say, the upward momentum of stocks nowadays won't last long. Yeah, won't last long. As you can also see that the upward momentum for these stocks is about 1, 2, 3, about 3, 4 days, then it actually starts to actually had a slight sell off. So traders in the market are nowadays very short term. Yeah, quick take profit exit, quick take profit exit. Yeah, so even if you are on a short term trade, then of course you need to actually how to say take profit quickly, and of course don't hope that it can actually go back to the highs anytime in anytime quick. Yeah, so this was the sector. Yeah, so financial sector a bit okay right now. Healthcare, yes, healthcare also actually improved since I think last week also. Yeah, and if you can see all these stocks, J&J, Pfizer, and UNH has also spiked up by quite a lot. Yeah, in fact, even much more. If not, if the market was actually green yesterday, all these stocks would have actually gone up much more. So yeah, and then of course, consumer defensive is actually again one sector which is always in the defensive sector, right? And the tech is not it's continuing not looking good lah. Yeah, of course. The news on what is that? Apple, of course, somewhat related to China. Yeah, about 18-19% of its sales is to China, and the situation in China with regards to what is that? With regards to the closure of one of its sub outsourced plant, Foxconn in Shenzhen, right? Because of COVID, right? Then of course that would cause a slight delay in its production. So Apple had a yesterday, and it's actually down to 150 right now. In fact, if you look at Apple, right? Yeah, Apple, right? In fact, if you look at Apple, again, of course, it has again reached one level, which is at its 200 moving average, yeah, 200 moving average level, and is the level which how to say not very frequent. It actually goes down here, but of course right now I would tend to personally for myself, I would actually tend to wait for these stocks to actually go down further before actually taking any positions, mainly because it is also somewhat related to in a big part related to the China until the China issues, or the how to say, or the confidence of the overall political situation between them and China and the US, right, does not continue to worsen, then possibility then of course this stock might recover. But until then, I think the downward pressure for Apple would still be there for time being. Yeah, for time being. And of course, if it goes down to really significantly low, like 130, right? Okay, that is possible also to actually take in some positions, in terms of in your long-term investments at 130. I would say is actually a good entry, yeah, for myself personally. If it goes, it's good. Of course, if it doesn't, then I won't touch this for time being. Yeah. So Apple is one. Yeah. So what else here? Of course, Amazon and last week was actually quite bullish because of the stock split announcement. It actually went up by quite a lot after the announcement, but I would say it had actually lost up a bit of its upswing. You think Amazon, right? Amazon. Yeah. So if you look at Amazon, right? Okay, Amazon is actually suffering the same kind of fate as Google. Okay, because when Google actually announced its stock split, and also coupled with the good what is that earnings announcement, right? It actually went up about 8 or 9%, if not mistaken. And of course, subsequent to that, Google has actually lost all the upswing. The same as Amazon, right? Amazon has actually announced a stock split. People were actually bullish. It went up, I think, $100 here. Yeah. Then subsequent to that, it had actually sold off back down to almost half the level of the increase to the high was actually given back. Yeah, so that was actually Amazon. Yeah, so if you are still bullish about Amazon, I mean, this might also be an opportunity if it actually comes back to a low point here. Yeah, for you to actually how to say, put in to ride on the so-called upswing towards its stock split. If not mistaken, it's on June 6th, I think, June 6th. But bearing in mind, if the overall market sentiment does not improve, there would also not be likely a huge rally for any stocks to actually go higher. Yeah, so that is actually the only caveat that there is lah. I mean, it will happen, of course, if overall market rallies, all stocks rise, all ship rise together with the tide, right? So if it doesn't, then of course I would say Amazon would also continue to actually trade within range. Yeah. So yeah, so this is actually the S&P, and of course, if you look at Nasdaq, right, Nasdaq itself, again, it is actually uh, uh, touching the bear, right, the bear market. I think it's still slightly above 20% down, 20% down, and the sentiment for the tech side is still not very positive. A lot of companies still continue to actually have sell downs. Yeah, but again, watch the level of 13,000. Once it breaches this, I would say it will continue to actually trend. It likely continue to actually trend down before more positive news comes out in the market, especially on the Ukraine-Russia turmoil. Until that is actually cleared, again, the market will continue to actually look bearish for Nasdaq. So these are the two basic key markets which the current state of it, and of course today I actually want to go through something with you guys. Let me just put this here. Okay, so today I actually wanted to go through something with you guys here. Okay, yeah. So as I said earlier, the Chinese stock plunged because of the SEC delisting, and of course, Yum China was actually one of the counters in the list. And of course, Yum China came out to say that it may be delisted as early as 2024. That was actually the statement coming out from there. And of course, because of that, they had a huge sell-off on Friday itself, and then of course on Monday, it also sold off a bit before recovering some positions, slightly up. It was actually down, yeah, but of course, if you see this was a green candle here, mainly because it came up from its low. It actually opened up, gapping up down very much. Yeah. So Yum China from $54, I think now it's actually trading at about $36. So all this was actually about 20%, 21% down. Yeah, and of course for those people who are actually afraid of this holding these stocks, right? They are also they Yum China is also listed in Hong Kong, but the stock in Hong Kong also had a huge sell off together with this. Even this today itself, I think the price also went down by quite a lot. Ticker symbol Yum China is let me check. Yum China ticker symbol for Hong Kong is 9987. 9987, yeah. So Yum China 9987 ticker symbol in Hong Kong. So for those who wants to get the Hong Kong one, of course you can actually get the Hong Kong one if you are afraid of all this delisting action. I mean, even if it is actually so-called delisted, there would be a mechanism to actually swap it over to the other listed counters. Yeah. Besides this, of course, the other sell off, of course, one is on the news of the delisting of ADRs, and of course, the other one is the overall sentiment on China as a whole against this current political turmoil or war turmoil in Ukraine, that China may face second level sanctions because they are close to Russia, or their Chinese companies wants to start to take over, buy some Russia assets, or try to actually help Russia in economically, or even politically, and all these kind of things. So because of that, there are a lot of sell down on all Chinese companies, yeah, listed in the US. This is Tencent, Baba, of course, JD also sold off a lot. This is Pinduoduo, Neo, what else? Baidu was also quite bad yesterday. Baidu was also quite bad yesterday. So of course, if you are holding on to these stocks, I mean, at the end of the day, I would say these are current sentiments, and of course, current sentiments would actually cause price movements, and overall, the business of all these companies are not really that greatly affected by all this kind of temporary turmoil, and the only thing, of course, in Tencent, there is also a bad news today that they are going to be imposed one big fine from the regulator, because of some issues on the WeChat payment services. Yeah. So again, sell off is temporary. Of course, if you have positions, then you can actually decide whether you exit, or you can continue to actually hold on to these stocks. And of course, the more buying power you have, I mean, basically, the more holding power you have, is actually won't take up that much stress for you to during this kind of turmoil, because all kind of temporary issues, right, would tend to resolve over time, and this is actually not what I say. Historically, it is also it has also shown that all kind of things to go, as long as the fundamental of the business still stays intact, then of course the opportunity for it to actually come back higher is actually much more. And I will also show you some examples. I mean, here, yeah, this was actually Apple, right? Yeah, Foxconn, Apple came down. I also show you some examples for those people who actually how to say, want to live in peace, want to invest in peace, This is something which is also very important to actually understand, is to have a very regular investment strategy. Of course, as a trader itself, we actually try to actually buy stocks at the best possible price, and basically we actually tend to actually put entries at support level, and when there is actually a retracement to a support level, then that's the time where we actually place entry. So these are more of so-called ad hoc entry levels that we trader would actually like to do, because we actually want to buy at the best price available. But of course, this also gives us a much more stress. Yeah, don't you think it is a stress to actually try to pick at the best possible price? And of course, once you actually add to that level, what happened is that the price goes even lower. I mean, it's actually quite common that you think that 200 moving average is actually the support, and you actually want to place a buy-in for your long-term investment there, and then you put one purchase level there, and then of course after that it even goes down further. Yeah, and that actually happens quite frequent. So you will never be able to actually time your investments at the lowest possible point. If you get it, of course, I would say it is actually a lucky, and you cannot always actually get that kind of buying positions. And of course, as opposed to that kind of investment buy-ins or investment strategy, right? And if you actually want to how to say, have less stress, And of course, this also takes in a bit more so-called discipline, and of course, what we call regular investment strategy, or some people or most people actually call it dollar cost averaging. Yeah, dollar cost averaging, where you actually buy in your favorite stocks, right, that you actually want to invest on a regular basis. And of course, I will actually also show you how this actually works out, right? Okay, so here, for say for example, I mean, basically what I'm showing you here is actually some stocks, right? Some stocks, a pool of stocks. Say, I think you can't see this very well. So this is actually Apple. Assuming we actually buy into Apple every year, we actually buy in once on the first day of the year where the stock trades, right? You actually buy in. So assuming we had actually done this for the past 10 years, right? Every 1st of January or 2nd of January, we actually buy with $100, right? $100. I mean, this is an example. I mean, you will have fractional shares here. Just for an example, we actually just show you, you spend $100, you invest in Apple stocks on the every first day of the year when the market opens, you buy one stock. So assuming you have actually done this for 10 years, right? So what happens is, of course, you actually get an average return of about 30, total return of about 33%, 33%. So high. Yeah, 33%. So this is actually 3,000 average return. This is actually average return of 33% for the past 10 years. Yeah. So you put in $1,000, and of course, till today, current price, right? The stocks which you have, is actually worth 28 stocks here, which is actually worth about $4,300. You only invested 1,000, so you have actually made a return of here is about 3,000 over dollars, which is 300%. So you divide by 10, is about 33% on this. Of course, then other examples, Facebook, not so great, because Facebook's shares is has actually dropped quite a lot. Only recent years it actually went up by quite a lot, right? So the returns is 10% based on current price, because current price has actually dropped by more than 50% down from its higher. So 10% for Facebook, and then we go on other examples. This is actually what stock is this? Amazon, McDonald's. I think this is actually Amazon. Yeah, Amazon average return per year for past 10 years, 21%. McDonald's, yeah, I mean, these are actually in the food business, right? So don't expect high growth. So basically, average return is about 5% here. 5% here for the past 10 years. So every regular first of the day, spend $100, buy the stock, regardless whether market is up or down. Just do it regularly. Yeah. And then of course, with a pool, right? I mean, I've just picked these 9 stocks as an example: Apple, Facebook, Google. Yeah, we have actually gone through that. Or earlier, that was actually Google, not Amazon. I think Google 3163. Yeah, it was Google. Then 21%. Amazon even higher return, 43% average. Adobe 28%. SPY 8%. QQQ 14%, McDonald's 5%, Bank of America 7%. So all in all, right, basically, if you actually do a regular investment, don't look at what kind of turmoil, war, COVID, and whatever. Don't look at it. Just do a regular investment. You will also get a return of 19.6%. 19.6% on just these stocks. Yeah, my favorite stocks. Or yeah, it can be your favorite stocks. 19.6% close eye, just do a regular or the dollar cost average at a regular interval. 19.6%. I mean, 19.6% is actually not bad. I mean, it's actually quite good returns itself. And in fact, a lot of traders don't get 19.6%. Even if they get 19.6% return, right? How to say? It will be a lot of work for them that they will have to actually go through all the news which you heard just now, right? China la, war la, all this kind of news, and to actually take heart attacks and cannot sleepless night looking at their positions, their portfolio going into the red. Yeah. So again, if you are how to say, there are many ways to actually make money from the stock market. You can actually go on a very straightforward, simple approach like this kind of approach. You can also get quite good returns. 20% or anything above 10% is actually not too difficult, even if you actually go on this strategy. Yeah, and of course here, if you actually look for great companies, right, then of course the returns can actually be much higher. Yeah. So what I actually wanted to tell you guys and actually give you guys a bit of comfort, I mean, during this kind of red days, bear market, which is actually coming, uh, might potentially come lah, yeah, okay, if things don't continue to actually improve. So the thing is, actually don't focus at the price now, okay, look further and beyond. If you continue to actually focus at the current price movements, right, I think you will have sleepless night looking at the Facebook or Baba price going down from 300 over dollars to now 80 over dollars. Yeah, Facebook price coming from 300 over dollars coming down to about 180 or 190 dollars. Yeah, so you would have actually sleepless night looking at all this. But of course, if you actually focus beyond, right, you actually focus not while your tree is actually at a sapling where it doesn't even bear any fruit, right, you continue to actually water the plant, right, water the plant. This is a papaya tree. So you continue to water the papaya, you don't see any fruit, right? I mean, that is actually expected, right? I mean, if a papaya tree needs 3 years to actually bear fruit, right, you already know that. Yeah, it takes 3 years to actually bear the fruit. And what you actually need to do is you continue to actually nurture it. It's the same thing as your investment, right? I mean, you don't expect for you to actually get 100% return in the next 1 month, 2 months, or 3 months, or even a year on any stocks which you buy. Yeah, of course you need to actually continue to actually nurture it. And of course, for this nurture on your stocks, what we meant is actually you continue to actually dollar cost average buy in at the regular intervals price point. If you do not want to um, buy at each of its how to say retracement low levels, you just do a regular, it's also fine. It's also fine. You can also get quite good returns by actually doing that. Yeah, in fact, that kind of investment strategy would how to say, can potentially give better returns, because that's actually on average. If you are actually trading maybe during a bad year, right, maybe during a bad year, and of course, if you're not careful, you would actually even lose more, and you actually take much more time to actually recover or what you have actually lost in certain years. Yeah. So again, don't focus at what's happening currently. Yeah, look for great companies and look further and beyond where you want to actually reap the rewards and to actually eat the papaya. Okay, great. So this is what I actually wanted to share. Hope that it can give you a bit of perspective amongst all the bad news coming right now. And of course, if you are already doing the correct things, great. Continue to do what you are actually doing. And of course, if you are not that certain about all these kind of things, I would say time would actually work things out for you, as long as you do not actually how to say, you do not actually take excessive risk and start to actually leverage in your positions, if your investing positions. The short-term volatility or the downward movements of great stocks would eventually recover. Yeah, that's what I actually wanted to share with you guys. Okay, great. So what's happening in the market? Green day or red day? Actually, as I said earlier, it doesn't matter. Don't focus at the current thing. And of course, if you are trading, as I said, take quick profits whenever you are up. Yeah, just go. I mean, S&P futures is actually just +4. I would say is probably unchanged. Of course, Nasdaq is futures is plus 30, plus 30, 33. Again, I mean, the current market, we will actually see how it goes. I would say it probably won't move much. If it moves much, it will be followed on with a sell off if there's no significant change in news. VIX continues to trade at 32. Yeah, VIX continues to trade at 32. In fact, higher than last week. Last week, I think it was actually at 30. It did not manage to actually go down below 30. Yeah, and of course, if it don't go down below 30, the market sentiment is also cautionary. Yeah, so things can actually move the other way quite fast. Yeah. So great. So that's all for me this week. A short one. If you have any questions, you can actually post down. I don't see any. Maybe something wrong here. Let me see. Okay. I mean, if you have any questions, you can actually post. I'm not sure if I can see it here. Uh, you can actually you can post. If there's no questions, then I will catch up with you uh, again another time next week, and until then, if you have other things, just post on our Facebook page. You can put there and I can actually answer any questions. Otherwise, you can also email us at this email here. Okay. If you have long questions, email me there lah. Let me see. Yeah. So email me at this email. Yeah. Then I can also address any of your questions through email. Yeah. Lengthy questions, send me through email. I can answer privately. Yeah. Okay. All right. Okay. So that's all from me. Signing off. Hope you have a good trading week again. Uh, and I catch up with you next week. Bye bye.